Hello, in this video we'll be talking about bank reconciliation statement. Now, the whole idea of bank reconciliation statement is to record money paid into the bank and the sums from the bank with checks in the cash book. The bank will prepare a transaction on its own in its own book. This book is called bank statement. The balance of the cash book of the business and the bank statement must always be equal, must be the same. There must not be difference. Everything must be equal. So that means if you have found 100,000 in the cash book, we should also find 100,000 in the bank statement. But there are certain times that bank statement and the cash book used to have some disagreements. Now, whenever there's a disagreement between the cash book and the bank statement, then bank reconciliation statement will be prepared. Now, what is bank reconciliation statement? Bank reconciliation statement is a statement that is prepared to reconcile disagreement between the bank and the cash book. Now, so what are the reasons for disagreement between the cash book and the bank reconciliation statement? We have 10 reasons. 1, unpresented check. 2, uncredited check. 3, dishonored check. 4, bank charges and interest. 5, standing order. 6, dividend. 7, credit transfer. 8, error by the bank. 9, direct debit. 10, undercasting or overcasting of the received side of cash book. Now, all these are the problems why bank reconciliation is prepared. In our next video, we'll be talking about correction of error and suspense accounts.